Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank India, and we are here to talk about what's happening on the domestic front as well as on the global parameters to understand the exactly viewpoints on several different currency pairs, particularly dollar rupee. So if we talk about the domestic factors for 2025, we are seeing outflows from equities to the tune of around 27,000 crores. And if we talk about debt, we are seeing an outflow of around 3,000 crores. So not a positive start when we talk about flows, but we believe there may remain some pressure on the equity markets for some more time, till the point we don't or we aren't aware of the exact policies which are defined by Donald Trump, who will be resuming his office on 20th. That is from the equities and the flows front. If we talk about the CPI number, which came in at around 5.22% versus 5.48% in November. Food inflation cooled off sharply. If we talk about vegetable inflation, that cooled off by around 26%. And also, if we talk about the core inflation, that came at around 3.6%. If we draw down this food and beverages number, it came around 7.69% versus 8.2% earlier. So inflation still remains under TAT at this point in time, which is better off in terms of the overall number. But if we move on to the FX reserve data, we have seen a depletion of further FX reserves to 10 months low now to the tune of around $634 billion. So we have seen dollar rupee rallying towards or 86.80 or level. So where this is an important parameter to understand that if the intervention remains more higher, would it be a right strategy or no? In fact, we heard some comments which were highlighted on Bloomberg stating that the RBI governor is of the opinion to have a demand supply for dollar rupee, which means indirectly, I think the hint remains that we may see further weakness in rupee in the coming days or months to come. At the same time, if we talk about the liquidity conditions, it's already very tight, and we are expecting it to be further tight. And if the intervention happens like by selling dollars, it further tightens the liquidity more. So RBI may not have much of the avenue to intervene heavily in case if we see a right side move. If we talk about the global factors, the Fed, the data points, if we talk about the US first before going to the Fed, the labor market data or the jobs data has been phenomenal. If we talk about the US PPI data, that came in softer than expected. But overall, it gave a boost earlier as per the data points which showed towards the dollar index moving towards 110 levels. So it did cool off after softer than expected PPI number. We have the CPI number due, and we are expecting around 2.8 to 2.9% of CPI number year on year from the US. But yes, we are expecting 1 to 2 rate cuts for the entire year. We feel lot would depend obviously on the policies which will be framed from here on. For Indian perspective, we may see the budget obviously in the month of February, which will be crucial. And secondly, it's also important that what policy framework we have in the February month. I believe there could be one pause before we, further go for a rate cut, at least for the month of February policy. For dollar rupee, we have seen NDF moving higher several times in bits and pieces at premium. So there are still some arbitrage opportunities at entrance which prevail, which is pushing the onshore spot even higher. Yes, at entrance we have seen intervention by the central bank to curb excessive volatility. But overall band from here remains 86 2025 zone acts as a good support now. And on the right side, 86.80 remains an important resistance to watch out. So that's all from my side, friends. Wishing you all a wonderful day ahead and a wonderful week ahead as well. Thank you so much.